Inflation, the silent thief that robs us of our purchasing power, has long haunted the world of traditional finance. But what if there was a digital fortress, impervious to its grasp? In a world where traditional currencies are subject to the erosive effects of inflation, Bitcoin emerges as a potential safeguard for preserving wealth. Understanding the dynamics of inflation is paramount to appreciating Bitcoin's role as a hedge against it. Inflation, the gradual increase in the prices of goods and services over time, erodes the purchasing power of fiat currencies. Historical examples abound, from the hyperinflation in post-World War Germany to more recent instances in Zimbabwe and Venezuela, where citizens witnessed the rapid devaluation of their money. Against this backdrop, the allure of Bitcoin as a decentralized digital alternative becomes increasingly evident. This video explores the unique characteristics of Bitcoin that position it as a potential hedge against inflation and a store of value in an uncertain financial landscape. Understanding inflation. Inflation, often described as the silent thief, stealthily diminishes the value of money over time. It's the gradual decline in purchasing power as prices rise for goods and services. Governments and central banks typically target a low, steady rate of inflation to stimulate economic growth and avoid deflationary pressures. However, unchecked inflation can lead to economic instability, as witnessed in numerous historical examples. From the Weimar Republic's hyperinflation in the 1920s to Zimbabwe's hyperinflation in the 2000s, the consequences of runaway inflation are dire, resulting in currency devaluation, loss of savings, and social unrest. Understanding inflation's impact underscores the importance of exploring alternative stores of value like Bitcoin, which operates independently of central bank policies and offers a finite supply, potentially preserving wealth in the face of inflationary pressures. Traditional inflation hedges. Traditional assets like gold and real estate have long been favored as hedges against inflation due to their tangible nature and historical track record of preserving value. Gold, often regarded as a safe haven asset, has served as a store of value for centuries, maintaining its purchasing power over time. Similarly, real estate investments offer intrinsic value and can provide a hedge against inflation by appreciating in value alongside rising prices. However, both gold and real estate come with their own set of challenges, including storage costs, liquidity concerns, and market volatility. As investors seek alternative avenues for preserving wealth, Bitcoin emerges as a compelling option, offering the advantages of portability, divisibility, and decentralization, without the physical constraints associated with traditional assets. Bitcoin's unique characteristics. Bitcoin, introduced in 2009 by the pseudonymous Satoshi Nakamoto, represents a paradigm shift in the concept of money. Unlike fiat currencies, which are subject to the whims of central banks and governments, Bitcoin operates on a decentralized network of computers, known as the blockchain. One of Bitcoin's most defining features is its fixed supply of 21 million coins, a stark contrast to fiat currencies, which can be endlessly printed. This scarcity is encoded into Bitcoin's protocol, with a predetermined issuance rate that decreases over time until the full supply is reached. The finite supply of Bitcoin imbues it with intrinsic value, akin to digital gold, and positions it as a potential hedge against inflation. As central banks continue to implement expansionary monetary policies, the appeal of Bitcoin as a censorship-resistant, deflationary asset grows, making it an increasingly attractive option for investors seeking to preserve purchasing power in an inflationary environment. Fixed supply versus inflationary fiat currencies. The contrast between Bitcoin's fixed supply and the inflationary nature of fiat currencies is stark. While central banks have the authority to increase the money supply at will, Bitcoin adheres to a predetermined issuance schedule, with a maximum limit of 21 million coins. This scarcity is fundamental to Bitcoin's value proposition, as it ensures that the cryptocurrency cannot be devalued through arbitrary increases in supply. In contrast, fiat currencies are prone to inflationary pressures as central banks engage in monetary policies such as quantitative easing to stimulate economic growth. Over time, this continuous expansion of the money supply erodes the purchasing power of fiat currencies, making them less desirable as stores of value. Bitcoin's fixed supply, coupled with its decentralized nature, offers a compelling alternative for individuals seeking protection against the erosive effects of inflation. Preservation of purchasing power. The preservation of purchasing power is a fundamental goal for investors seeking to safeguard their wealth against inflationary pressures. In this regard, Bitcoin's scarcity and deflationary attributes make it an attractive option for preserving purchasing power over time. With a finite supply of 21 million coins, Bitcoin is immune to the inflationary pressures that plague fiat currencies. Instead of losing value over time, Bitcoin has the potential to appreciate in value as demand outstrips supply. This phenomenon has been observed throughout Bitcoin's history, with the cryptocurrency experiencing significant price appreciation during periods of economic uncertainty and inflationary concerns. As governments around the world grapple with mounting debt levels and expansionary monetary policies, Bitcoin's role as a censorship-resistant, deflationary asset becomes increasingly relevant, offering individuals a hedge against the erosive effects of inflation and a means of preserving purchasing power for generations to come. Research and empirical evidence. Research studies and empirical evidence provide valuable insights into Bitcoin's efficacy as a hedge against inflation. Numerous academic papers and analyses have explored Bitcoin's price behavior during periods of economic uncertainty and inflationary pressures. These studies consistently highlight Bitcoin's potential to serve as a store of value and hedge against the erosive effects of inflation. For example, research from institutions like Yale University and the Federal Reserve Bank of St. Louis has documented Bitcoin's low correlation with traditional asset classes and its resilience during times of economic turmoil. Additionally, empirical evidence from countries experiencing hyperinflation, such as Venezuela and Argentina, demonstrates the growing adoption of Bitcoin as a means of preserving purchasing power and circumventing government-imposed capital controls. As interest in Bitcoin as an inflation hedge continues to grow, ongoing research efforts will further elucidate its role in the global financial landscape. Risks and considerations. While Bitcoin offers compelling advantages as a hedge against inflation, it is not without risks and considerations. Price volatility remains a key concern for investors, as Bitcoin's value can experience significant fluctuations over short periods. Additionally, regulatory uncertainty poses challenges to mainstream adoption and may impact the long-term viability of Bitcoin as an inflation hedge. Furthermore, technological risks, such as potential vulnerabilities in the underlying blockchain technology and cybersecurity threats, warrant careful consideration. Investors should conduct thorough research and exercise caution when investing in Bitcoin, ensuring they understand the risks involved and are prepared for potential market volatility. Despite these challenges, Bitcoin's unique characteristics and growing adoption suggest it may continue to play a significant role as a hedge against inflation and a store of value in the ever-evolving global economy. Adoption and institutional interest. The increasing adoption of Bitcoin by institutional investors underscores its potential as a hedge against inflation. In recent years, prominent financial institutions and corporations have begun to allocate capital to Bitcoin as part of their investment strategies. This institutional interest has been driven by growing recognition of Bitcoin's scarcity, its digital gold narrative, and its ability to preserve purchasing power in inflationary environments. High-profile endorsements from figures like Paul Tudor Jones and institutions like MicroStrategy and Tesla have further bolstered Bitcoin's credibility as a hedge against inflation. Moreover, the emergence of regulated investment vehicles such as Bitcoin exchange-traded funds and futures contracts has made it easier for institutional investors to gain exposure to Bitcoin while mitigating certain risks. As institutional adoption of Bitcoin continues to accelerate, its role as a hedge against inflation is likely to become more prominent, providing additional validation for retail investors seeking to protect their wealth in uncertain times. Conclusion and future outlook. In conclusion, Bitcoin's fixed supply and decentralized nature position it as a compelling hedge against inflation in an era of unprecedented monetary expansion. The contrast between Bitcoin's scarcity and the inflationary policies of central banks highlights its potential to preserve purchasing power over time. While risks and challenges exist, including price volatility and regulatory uncertainty, Bitcoin's unique characteristics and growing adoption suggest it may continue to gain traction as a store of value and hedge against inflation. As individuals and institutions alike recognize the importance of protecting their wealth in inflationary environments, Bitcoin's role in the global financial landscape is likely to evolve, offering an alternative store of value and a means of financial empowerment for generations to come. As we conclude our journey into the realm of Bitcoin, it's evident that this digital currency holds immense promise as a hedge against inflation and a beacon of stability in our ever-changing financial landscape. Now is the time to take action. Educate yourself, engage with the community, and consider how Bitcoin can empower you to protect and grow your wealth. Whether you're a seasoned investor or new to the world of cryptocurrency, embrace the opportunities of the digital currency revolution. Together, let's shape the future of finance with confidence and purpose.